Welcome to today's live. This is Kai Wiyn. I'm about to give you the breakdown for today's trade. We're up $21, and I'm also going to give you two terrible mindsets that will keep you being a retail trader and certify you as a official liquidity giver to the market, which means that you lose all your money and everybody else capitalizes off the fact that you don't know how to do how to not do these two terrible mindsets. So I'm going to give them to you. I'm also going to give you exactly how to change them based on Alex Hormozy's principles. So today, I'm also going to show you how I exited green, and I genuinely think I saw the light today. If you've watched my previous two lives, you don't have to watch them, but if you did watch them and you're up to date, I have been making so many different changes in my trading, and I saw the light today. So I'm giving you everything that I have been understanding and learning and giving, literally handing them to you, like exactly the good stuff I'm doing, exactly the bad habits I have, and exactly how to use them to your specific benefit. You can literally copy and paste them to your own trading, or like the bad habits, you can directly remove them. You know exactly what your problem is, because I personally spend hours every single day studying professional traders, not just retailers, right? Not just retail traders. I study professional traders, and I actually pay mentors to be taught this type of stuff. So this is the stuff that's working for me, and watch throughout this whole video to get all those points I just gave. Now let's get into it. So one of the worst mindsets. Also, we're watching QQQ 1 hour on the left side, and we have our 4 hour on the right side. And literally, this is the trade that I took today with this green candle, and I'll tell you exactly why I entered, why I exited, and exactly how I ended up with my profit today. Now, while we're watching these candles still, let me go into the first mindsets that are going to keep you a retail trader forever and exactly how to undo them. So the first thing is that you have the mindset of, oh, well, at least I was green on the day. At least I exited in profit, right? This is something I really saw yesterday with FOMC, which is a huge federal meeting. FOMC is insanical when it comes to price movement. It just does whatever it wants to do. It's like the beast of all the news we could possibly have. And so when you're telling yourself, oh, well, at least I was green, no, not at least I was green, not at least I exited and didn't lose my account. Like, no. When you enter like that and you exit, and the first thing you say is, oh man, at least I was green on the day, like, that's not okay, because first of all, your red days, like how much you lose, should already be predetermined before you even enter, number one. And number two, when you're talking like that, that means you're really attached to having a green day, which is a terrible mindset to have long term. Because if you're attached to having a green day, that means, and I'm just moving this around a little bit so I can zoom in on this 1 hour. But when you're attached to having a green day, what's happening? Yeah, I'm gonna spread this out too to make sure I can actually read this. But when you're having a green day over and over and over, then you're basically saying, hey, whatever I'm doing, even if it's right or wrong, doesn't matter. At least I'm ending green. At least I'm not blowing my account. Like, you have to have more sustainable habits than just exiting green. Making money is just not enough anymore as a trader, which is why is why I'm still in the group that I'm in. They're technically retail traders, but I learned from professional traders. That's specifically why, because they have a totally different mindset, and so I can see both sides of the coin and bring the best to my channel and apply the best to my trading. So the second thing is, sometimes you have to just get the thing done. When you are trading and you are so in your mind about, your trades or your psychology or your strategy or whatever you might be currently struggling with as a challenge, you might have to do more work than you think you have to get over it. And that's what I've been having to do. I've been having to watch a lot more videos, do a lot more research, actually cough up money and pay to be mentored instead of trying to struggle on my own. Because guess what? This is not something that someone can do on their own. Like everything in life, you can't do anything on your own. we're meant to be helped by other people with the knowledge that we want to have. And so I thought about this today when I went to the gym. Like, often I have to go to the gym twice a day because I just can't finish my workout. I do 5 miles a day minimum. And so when I have to do that, some days I have to go in the morning to just get a piece done, and I'm really busy throughout the day, and I have to go back in at night, or I have to go back in a few hours. Like, sometimes you just have to do extra work to get the goal that you have. So yes, you might look at me and say, "Oh, yeah, she goes to the gym all the time. She has a personal trainer. Everything's easy." No, I have to make conscious decisions to do the hard thing. I have to go to the gym twice a day, multiple times a week, because of my schedule. And so it's the same thing that's applied to my trading. Like, I often have to watch a lot more videos than I anticipated. Sometimes I'm like, I love the strategy that I have, but let me actually dig deeper a little bit. Let me do a little bit more research than I think I need to, and just do that extra little 1% more every single day. And so that's just something that I was thinking about today. And also, the biggest thing is plan your trade and trade your plan. So for me today personally, I'm gonna go over my trade today. So my current strategy is range breaks or range rejections. Sorry. So I do not play breakouts. I specifically look at where price is ranging and I take rejections off of the walls. Okay, so the first wall is down here. Is 619.5. The second wall is 636. If you care to know why I drew all these lines here, go back to my FOMC video that I posted yesterday. That video is going to talk more about it in depth, but I am still going to go over it right now. So the reason why is because previously price has rejected here and price has made a support here. So essentially, I'm looking for a range. I'm looking where price is hated to go above and price is hated to go below. That's all I'm looking for. And then when it gets to a point, right, so I have these alarms here, which is to tell me, to email me. These alarms email me when price hits this point, and then I'm coming in. I'm not taking this break. Absolutely not. I'm waiting for it to start to go back to the upside, exactly what it did today. And that's why I was able to end in my green. So my plan is whatever comes up here, I'm taking it back inside the gap, or I guess inside of the range. Whenever price comes down here, I'm not taking the break out of it. I'm taking a bounce back in it because I understand that is what I know how to do. So when it comes to professional traders, one thing I'm learning is that they trade in their comfort zone. They don't try to do all types of other cool tricks and tips and all types of hacks and whatever. They literally know their edge. They know what type of person they are. They know what makes them sweat profusely. They know when their heart rate starts kicking up. They know. Oops, I'm so sorry. Um, I'm getting a little passionate. I done dropped the phone and all type of stuff. But they know what is their edge and they trade in their comfort zone. So that's what I've decided to do. I'm like, I love a good range. I know how they work. I see them with my eyes closed. I'm gonna focus on that only. And guess what? It's doing exactly what I wanted it to do. And now because I'm focused on this strategy, I'm able to trade my plan. So I'm able to trade my plan simply because I have a plan. My plan is I know my comfort zone. My comfort zone is trading these bounces out. Like when it gets to a wall, I trade back inside. When it gets to a wall, I trade. Like that is my bread and butter. So I'm gonna plan my trade by setting my alarms at lines that I actually want to take. Now these gray lines here are also I'm going to explain this yellow line here as well. But these two here are definitely still rejections and support, still a range, but it's not big enough for me to care about it. So I basically did the next one out and the next one out. That's basically like I could have put alarms here and here, but I care more so about a bigger movement because that's part of my strategy. So I put an alarm here and alarm here. That's my plan. Okay, cool. Yesterday it hit it, but it did nothing. So guess what? No trades. Today it hit it and did what? Actually rejected up. So, but well, it actually did this this morning. So it hit during pre-market, I could have said, "Oh my gosh, it hit it." So when market opens, I'm gonna go ahead and enter for my calls. Okay, well I would have been totally out because it no, that's not how it works. I have to trade my plan. What is my plan? My plan is based on market data that's happening when the market's actually moving, not pre-market and post-market. Even yesterday, it came down and poked a little bit um, towards my entry, and I honestly would have entered here. Like the the Kai win from 2 days ago would have entered here and said, "Oh, it's gonna go down," and just would have been super duper out because you're just doing too much. Um, it did end up breaking. It did end up respecting this rejection. I guess this support. It rejected off that support or bounced off that support, and that could have been a trade too. But it was FOMC. That's not part of my strategy. I'm not supposed to be trading anyways. And so, if you have any questions about anything I'm saying, just drop a comment or question. I will definitely fully answer it. But that is literally why I was able to take the trade today because I planned my trade and I traded my plan. When it came down here, guess what I did? I had my ultimate patience, and I'm like, oh my gosh, I'll be so sick if this 618 breaks to the next range, right? If it just slammed down to the next range, I'd be sick. But I'm like, no, 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 no. It's not gonna do that. Why? Because the line 619.5 has shown me it is only ever acted as a support. It's never acted as a resistance. It's never resisted here. It's only bounced. It's only bounced. There's never been price that wanted to hold underneath it. So why would it want to do it now? There's never been price that wanted to hold it. Even when price wanted to hold underneath, it came straight back up, straight back up. It's only ever really acted, and this was out till a week ago. So prices really recently wanted to act as a support, and I'm gonna treat it like that, okay? And that's why I was able to trade my plan and plan my trade. The next thing is when you're wrong, and be wrong fast, and be wrong small. When you're wrong fast, and like honestly, within the first 5 minutes of your trade, you can tell if it's gonna be good or bad. So if you're wrong, if you just like if it literally wanted to keep slamming through, and I was in here for some calls because I went in too early, right? And I didn't wait for the candle to actually set up above that line, right? And it literally bounced $4, and that's where I was taking my profit, which is amazing. But if if I was in there and it started to go down and I was wrong about it holding as a support, like all of a sudden it's only ever wanted to be a support, but now it wants to break through. Well, guess what? Then I should have exited super small and had my risk management and quit that trade very, very quickly. So it's all about like if you're going to be wrong, be wrong. Don't let your wrong turn into something worse, right? And in this case, it ended up working in my favor, and I was able to make my money on my trade. The next thing is I was watching a video, and this guy who was about 60 years old, I was watching School of Hard Knocks, and this guy was like, do you know any employee that will work for you 24/7? They never get sick. They never put in a late notice. They never not show up. Like, they're never tardy. They work 24/7 every single day. And then I'm like, no, that doesn't exist. There's no person who can do that. He's like Susan B. Anthony and Benjamin Franklin. Money. Money is the employee that can work for you 24/7. So that was just something I wanted to touch on. Maybe that inspires you as well. Because it's like, how much are you letting Susan B. Anthony and Benjamin Franklin actually work for you? Because those are the only things you can really rely on to work 24/7. It's almost like AI. Like AI can run 24/7, can work 24/7, right? Better than any human ever could. But money can do the same thing. So I think money was the original automator. So that's just being honest. We have an alert on futures for NQ. Let's go look at it real quick. I think yeah, so it's doing the same thing. It kind of follows the same pattern. So I thought oh, I didn't turn the alert off, but I turned off, I could pause the alert actually, but I actually turned off it from my email, but it's still gonna come through here. But anyways, let's go back to my chart and keep going. So the next thing is that, um, yeah, just back to the original point. Like if you're wrong, you'll see you're wrong pretty early on, and so just let your wrongs be small, and don't let something that could just be a small loss turn into something big, because you don't want to be wrong small. And yeah, like what I'm biggest thing I'm learning right now is just trade what's easy for you to understand, which is basically like trade within your comfort zone. So for me, trend lines are literally the most confusing thing on the planet. I'm not gonna even lie to you. Like trend lines are essentially like diagonal lines, right? That mark swings, like high swings, low swings. Bro, I started with trend lines and I was like, absolutely not. And I've never went back to them. It's been a very long time. I haven't even tried to go back to them because I just abandoned it. Like sometimes you have to abandon the thing that is not working for you. And so yeah, I just abort mission very quickly when it comes to things that don't work for me. The next thing is to that I'm learning from professional traders is to trade based on your specific tolerance. So for me, I use the 1 hour and the 4 hour. Why? Because I've noticed a huge decrease in my stress, um, because the noise is very, very, very low on a higher time frame. Now, obviously, if I was holding this swing for 2 or 3 months, to the upside to hit this next level, because that's technically where I want to exit, or even here, but it's red right now, well, I'd be shaking in my boots, right? Even on the 1 hour. But the thing is, I'm a scalper, so it doesn't matter. I took my $4 bounce, and that was what I needed. But I could also be swinging this, but guess what? That's not my strategy. I'm not a swinger. I'm not supposed to be holding it for that long. So I'm abiding by my plan, and that's what's allowing me to be able to stay in the game and be able to learn over time. But you have to know your tolerance. Like when you go down to the 15-minute, are you sweating bullets? Is your heart rate going up like you're being chased by a lion? Like, because personally, I'm watching this be read, but I don't care. You get to a point where you're looking at something and you're calm. That's where you should be trading at. Don't trade outside of your tolerance, because if you're trading outside of your tolerance, what happens is that now you're mixing stress with an already stressful environment, and now you can't make good decisions because you're really, really stressed. So the same thing for me, like on the fifth, I was using the 5 minute for a long time, but it started to stress me out. So I stopped using that. I went to the 15, right? I go up to reduce the noise. So I reduced the noise, but then eventually the 15-minute got too hard for me too. I'm like, oh my gosh, like it's so hard to feel calm on this 15-minute. So I go up. And the thing about it being hard to feel calm on it, it's also really hard to stop looking at it because it's a lot of noise. It's constantly moving. Every 15 minutes, it's a new candle. And so it moves a lot more. There's a lot more movement, and there's a lot more um, action happening on the lower time frame. It's showing you every single little piece of movement. And so it's really hard to stop looking at it too. So when you're in the habit of looking at the lower time frames, then you just, you say you're going to look at the higher ones or you're going to look at something different, but you always return back to it, and that just immediately puts you back into stress mode, and then it just perpetuates it over and over and over. So yeah, just stick to what is your tolerance. Like for me, swinging is not in my tolerance. That's why I don't do it. Because if I had to understand that I have a comfort zone of my boundaries, right? I love the walls. I love what they do. I can take a nice $4 or $5 bounce off of it. Literally came up to my next key level, perfectly kissed it perfectly, and that was it, right? But if I had to hold a swing to this level or this level, which means holding it overnight or up until 6 or 7 months, I would be twirling in my boots right now, literally, because it's reversing, right? And so I'm not in the business of being correct. I'm in the business of taking advantage of what's in front of my face. And when I saw this bounce, when I saw rejection here, and I saw it go back up above my 619, and then it holds $4 to the upside, that is the business I'm in. So although I use a higher time frame, I do not swing. I am still a scalper, just to be fair. Because holding it for an hour, holding it for 20 minutes, like it probably did that for 10 minutes, 10 or 20 minutes to reach here. A 10-minute trade does not mean you're an intraday trader or you're a swinger. I'm still a scalper. Right? I really feel like anything under an hour is still a scalp, honestly. But there's some people who are super scalpers and they're doing 5 second, 10 second, 20 second, 60 second trades. No, that's high risk environment for me personally. That's not where my tolerance is. My tolerance is scalping on a higher time frame. Period. Point blank. Within my walls. Right? So the next thing is one of the things that might keep you placing trades, if this might help you, and definitely share this video to a fellow trader if you've known they struggle with this, but if you've ever had a problem placing trades because you just kept doing it but you didn't know why, and you were in your risk management but you kept doing it even when your play wasn't there, it's probably because contracts were super cheap. And on QQQ, they expire every single day. On SPY, they expire every single day. So on a regular, I say regular as in like an actual company, right? Because QQQ and SPY are groups of companies. Russell 5000 is a group of companies, right? But when you're trading something like Tesla, those contracts don't expire every day. They only expire on Fridays. So when you're trading QQQ and SPY and there's 0 days available every single day, well, what that means is that they're always going to be pretty cheap, especially on a day where there's um, not a lot of volatility, or there's not a lot of news, there's not a lot about like movement, not a lot of whatever. It's just a regular day, right? And so that kept me in the habit of continuing to buy really cheap contracts because they were in my risk management, and I'm like, okay, well, I might as well take a shot. I might as well. I might as well just take a shot at it because it's in my risk management. Because they expire daily, there's always a 0 day to take. Then you just keep doing it. So if you've ever struggled with that, it's because you're doing the right thing in your risk management, but you might be trading QQQ or SPY or just something that has daily expirations, or some people only trade Fridays where, because contracts expire on Fridays. So that might be the cause of that. And just as an update, I'm only paper trading. So this $21 was paper trade. And I'm going to show you my trades. I'm going to literally show you like the actual trade itself of when I entered and exited too. If I can pull that up on the screen, I definitely will do so. So yeah, I'm doing that until July 31st, 2025 minimum, to detox from all the money that I've made from making bad decisions. And I really want to develop into a professional that can do this long term. Today showed me I've seen the light. I know what it's like to step out of actually using my capital and be able to say, to make different decisions and be able to make good decisions and be able to make smart decisions like a professional trader. So I'm willing to stick this out until July. I mean, that's going to blink your eyes and July is going to be here. And I'm going to have built a skill of a professional trader. And I'm very excited about that because I take this very seriously. I'm not going to lie. Like, my entire channel is trading. So I research patience every single day. And one of the things I researched about patience, because that's one of the core qualities of a good trader, of a good professional trader. And what I learned is, what I was looking for is, what is it? What is patience? How was it built? Where did it come from? Where did it originate? All the things, right? I also really like how it bounced off the 619 just now, but we don't know if it'll hold like that. But I think that was pretty nice. So the one thing that I found was actually an Alex Hormozy video, and he said that he used the example of these kids, and these kids were like had an experiment where they would sit in front of a donut and they were told they couldn't eat it. The kids that succeeded from not eating the donut literally ignored the donut at all cost, and the kids that failed stared at it. They stared at the donut, knowing they couldn't have it, and then they eventually broke. They eventually broke the rule. And so, what I took from that is that the key to patience is not being a perfect person. The key to patience is removing the stimulus. And so, if the charts are the thing that's breaking your patience, because this is the thing that we look at in this case, like this is our donut, right? We're just waiting until we have permission to snipe. They were waiting for permission to eat it. So we're waiting for permission to snipe. And so what happens is that if you remove the stimulus by doing your alarms, so it emails you when you need to come look at it, you need to come look at the charts, you get an email, but besides that, you keep everything closed. That is actually how you do it in trading. Because when I watched the video, I was like, well, you can't remove trading. You can't remove the charts because the charts are what you need. But then I was like, there's no way you can't look at the charts because you need the charts, right? But the thing is, all you need is to be notified when it does something that you care about. And so if you think that you can't look away from the stimulus, aka the charts, that's the problem. Because if you think you have to constantly look at these charts, you're lying to yourself. And you're lying to yourself that these alarms are not sufficient for you. And it allows you to justify staring at these charts, right? It justifies a bad behavior of staring at these charts all day. You're going to stare and stare and stare and stare until, something like this happens, and then you enter to the downside when that's not even your strategy, and you're chasing something. Like, oh, I might miss it. If I only use alarms, I might miss my trade. Well, first off, your parameters of your trade strategy should be so good enough to where you do have time to get in, even if you miss the first 10 seconds of it. Right? You should have the alert's going to come to your phone immediately. You'll be okay if you get in at 20 seconds after. Right? And that's again why I decided to not trade these smaller gaps that are $2, because as soon as it hits here, it's going to be here in 2 seconds. But if I'm trading a bigger range, then I have time. Okay, when it hits here, I have time to get in to be able to make a better decision. I have time to get in. That's part of why I only trade gaps, or I guess ranges that are $2 or more. So chasing is this. This is the definition I want you to carry with you. Chasing is, I'm getting in this trade by any means. That means your risk is off. Your risk management is off. Your entry is off. Your position is off. Everything is off. Everything. That's what tilt is. When you hear someone say, "Oh, I entered on tilt," have you ever seen like something off balance? It's tilting. That's off balance. So your risk is off. Your position is off. Your entry is off. Your psychology is off. You're basically saying, "I'm getting in this trade by any means." That is what chasing is. So for me, let's go over my specific trade. And after I go over this trade, I will give you the good habits I used that got me my profit, the bad habits I used that I'm going to correct, and then what I'm going to do for next time, and that'll be it for this video. So let's first talk about the actual trade I took. Now, when it broke below this line, I let it close. I let the candle close. I saw it open. It came back up. I said, okay, this is my jam. It closed. It opened a little bit above, and I saw volatility with my volume bars here, right? I don't know why it's not on. Yeah, here on this volume bar here. You see a lot of green. So I entered, and then I exited, right? Perfect. Then, and professional traders do not buy contracts that expire on the daily. From what I understand right now, they always buy at least 1 to 2 months out. So I bought 2 weeks out because that was like my best way to get out into something farther out expiration. So I bought one that was 2 weeks out, and it was on my risk management. My trading account, my paper trade account, started at $1,000, and so I bought $100 contract that was 2 weeks out. It was about 22 contracts out the money, right? Cool. I took that trade. I exited. It was about like here probably. Then I was like, oh my gosh, it's still going. So I did that again. I entered for something that was 2 weeks out. I entered one, and it was on my risk management, and it was 22 out the money, similar. Then I took a third trade, and I entered here on this yellow line with 6 contracts because I knew it was going to keep going up. But I entered on a 0 day instead of 2 weeks out. So now my brain is back into retail trader rush mode. Gotta get this, gotta flip this, gotta do this, gotta get it now, gotta ah. And because I was in that mindset, I exited somewhere here. Right? It pushed a little bit, but guess what? It actually exited, literally exited on the squeeze. So I exited here, and then it actually like closed the contract somewhere down, like a few cents down. So I lost like 50 cents, I think, on each contract instead of taking it was at $30 profit total, but I ended up losing about 50 cents on each of the 6 contracts instead of taking my $30. So the reason why I say this is because I would have been up $60 total, but I'm only up $21 because it's a direct reflection of how you start tweaking out. Like you want to enter a 0 day because you want to catch a little push, but guess what? When you want to enter a little push, or you want to enter because of a little push, you're also scared of a little drawback. So when it starts doing this type of thing, you want to get out and you end up losing some of the profit. Now I'm still up $21 on the day. However, I could have been up over 60. And I was scalping a 0 day contract that I didn't need to. It's the really rushy energy. Rush, 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 rush. That really burned me in the situation. Rush energy is a disease, and it spreads very, very quickly. So I got out for the day. Like it squoze me out. I lost a few dollars. I was like, you know what, whatever. I turned off my alarms from sending me emails. I'm out for the day. Okay? So this, I'm telling you, like, even on the 4 hour, still really great for swings, but hey, I'm not a swinger, bro. That's not my type little thing. That's not me. So it's just not me. Maybe my strategy will evolve into that. Maybe, but not right now. So the good habits. I turned my alarm off when I was done. I focused on understanding that this was a support. It was never going to hold below because it never did that in the past. I had patience at my key level. When it broke, I let this candle close instead of just entering. Right? I let it close. I didn't over leverage any contracts at all. So the bad habits I had is, yes, I did stay on good leverage, but I also did a 0 day contract. So I could have did a 0 day that was a lot more expensive, but I did a 0 day on my risk management. It's still a 0 day. Still don't count. Still not supposed to be doing that. So it gave me rush energy. It made me exit on a squeeze. on a perfectly good setup. Like it's perfectly good setup. I could have still been in it low key, right? And just held it for 2 weeks. But I gave money back simply because I was in the rushy energy. And I was in a rushy energy because I entered with a 0 day. So that's just a perfect example of how when you enter on something that is you're entering without your rules, because right, 0 days are now banned. I'm only supposed to be doing 2 weeks out, and the goal is to get out to like be able to buy 1 month or 3 months out. But because I entered on a 0 day, now I'm just going backwards. Like I'm just doing the wrong thing. So the point is, when you start doing bad habits, it reinforces bad habits and you exit wrong because you no longer have patience. So giving money back on purpose is just as bad as giving it back on accident, in my opinion. So giving it back on purpose would be entering here and knowing I'm not supposed to enter, and I'm purposely giving it back because I'm purposely entering where I know I'm supposed to be waiting for the bounce up. But I gave it back on accident because I was $30 up and I just caught the squeeze on accident. But it's just as bad because I shouldn't have been trading a 0 day anyways. I wouldn't have caught a squeeze if I was trading a 2 week out contract because I wouldn't have been trying to exit super quick. And I would have ended up, instead of exiting here, I would have exited here probably in $100 of profit. Um, so the next time that I trade, keeping in mind, you don't have to redeem yourself from something that's not a problem. Like when you are trying to, like, okay, I entered twice, remember, and I had 22 out the money. What it showed me is, okay, cool, it's actually pushing up. I'm actually in profit. It actually did bounce. Oh my gosh, you're seeing the light. And so I was trying to redeem myself from exiting by then entering on a 0 day and trying to just get a little bit more profit out of it. But when I reevaluate and I step back, all is good. I'm still green on the day. I know what I did wrong. I know to stay away from 0 day contracts. I reinforce good habits today. Close the charts, turn off the alarms, mind my business, right? And so that's everything for today. I wanted to show you my screenshots of my actual price movement, but I don't know how to exactly do that while I'm on live. I'm actually going to try to do it right now, though. I'm going to get them on the screen so you can actually see my entries and my exits. Um, okay. This is actually the part where I'm like showing you my actual entries and actual exits of like what I actually did. And then we will discuss it. Or you know what? Instead of actually putting it on the screen, next time I'll make sure to do it beforehand. But let me just, I have the times here, so let me just not be annoying. Okay, so the first buy was at 04. I sold at 06. So I bought at 10:04. I sold at 10:06, which was in this candle. So I held it for 2 minutes. Then I bought one 107. At 107, I sold at 108. So I held that for 1 minute. So I'm 3 minutes total into in 3 minutes total into holding contracts on this candle, and those were the two that I did properly. Then I decided to buy 6, and I bought 6 at 10:08, and then I sold them off 10:13, 10:18, and 10:18. So essentially, actually no. Actually, I took 3 trades. Okay, so yeah. Okay, let me say this. The first trade I took at 10:04. I sold it at 10:06, so I held that for 2 minutes. It was in profit on this candle to the upside. Then I bought one at 10:07, and then I sized up 1 minute later at 10:08, and that was 7 contracts total. It was 1, and I added 6. Then I sold all 7 for a beautiful profit. So now I'm up $23 on my account. So then I bought 5 at 10:13, and I held these for 5 minutes. And then I held them for 5 minutes. I got scared because those were my 0-day contracts, and boom, I sold at literally break even. And then the last 2 were a little bit under break even because I sold 3, then sold 2. So I had 5 that were 0 days. But see, it all just makes sense. I'm telling you. Like, see how when I was entering with 2 weeks out, I bought 1 contract, sold it. Bought 1, sized up to 6, sold 7. Right? So I'm selling them, doing good. Then I buy a 0 day. I buy 5. I don't even size up. I just buy 5. And then I sell them, break even, and a little bit under break even. Like, what are you doing? And I held it for 5 minutes. Why? If I was gonna hold it for 5 minutes, I could have just taken it up here, because I sold it somewhere here. I could have held it for another $1 and been up $100. But when you enter on a 0 day, it's already fear and greed and rushing energy, and so you exit like that too, and you enter like that too. If you have a 0 day, why would you not buy a whole bunch in full port? Full port basically means like put a whole bunch of contracts. So I put the remaining of my account, which is $500, and I bought 5 $100 contracts. So they were on my risk management, but they were 0 days. So I just bought 5 out the gate because you're trying to rush it. You're like, I gotta get in. I gotta get in by any means necessary. Just doing too much. So, and then I lost money. I lost $2 with all those contracts. So yeah, ridiculous. That's the full cap. So just to recap, I bought 1, sold 1, good. I bought 1, added 6, sold them, great. Those are all 2 weeks out. Then here's where I took a turn. I decided I'm gonna buy 5 and full port the rest of my account. I should have bought 1, sized up to 4 on 2-week contracts. That would have been perfect. I would have held it because my mindset is not in a rushing energy, and I would have been great. So anyways, this trade would have been great. Just even now, like still to hold for a swing. I'm not a swinger. Maybe it'll evolve into that later. But yeah, that's everything for today. So just as a recap, there was a lot of gems in this video though. Just as a recap, gave you the 2 terrible mindsets that will keep you a retail trader, and how to fix them with Alex Hormozi's principles, how I exited green today, all my good habits I had, all the bad habits I had, so you can copy and paste exactly those things into your trading, because I spend hours a day studying this stuff. I take it very serious. So yeah, that's everything for today. I'll see you guys in my next